Second quarter economic growth figures are expected to dominate financial news developments today. A 0.4% expansion in South Africa's gross domestic product was recorded in the first quarter of this year. This encouraged positive sentiment of an economic recovery following the effects of COVID-19 and subsequent impact of negative developments, including rolling electricity blackouts, persistent high unemployment and a dwindle in consumer spending power. However, some of these challenges remain, and Reserve Bank Governor Lesetja Kganayago recently reiterated the current dynamics, including global factors.
We have now entered a challenging phase of the global recovery. Following a post-pandemic economic boom, global growth has once again slipped below longer-run averages. Global disinflation is underway, yet targeted inflation remains uncomfortably high, and underlying inflation is starting to look sticky above many central bank targets. Moreover, debt levels have been substantially posing risks to macroeconomic stability in many economies.
Analysts are also mixed on what's expected this time around on economic growth in South Africa. Economist Chifipa Mhango speaks to us about the expansion of that particular conversation. Chifipa, thank you so much for giving us your time. It's always a pleasure to speak to you. This time around, what's the forecast?
Yeah, good morning to all your viewers, and good morning to you, Tumi. Yes, I think we're expecting a little bit of an improvement from the previous number. Remember, we're dealing with the second quarter number here. So a slight improvement from that number, mainly driven by the easing in terms of load shedding, and also some sectors such as mining, obviously taking a drive in terms of the expansion.
And let's explain that particular stance, given that the Q2 numbers are not exactly the current reflection of the impact of load shedding, which has unfortunately now been ramped up. It is somewhat backward looking as opposed to the current state.
Well, it is. I mean, obviously the second quarter has already passed. We are now in the third quarter. So I think in terms of what the picture gives us is that not much as there can be a sign of improvement. I mean, I was looking at the second quarter environment with regard to the mining sector as well as manufacturing sector. There was a positive movement across two key segments of the economy in terms of growth patterns from the production side. But I think, as you put it correctly, that this new trend with regard to the much wrapped up in terms of load shedding is very concerning at this stage. I mean, stage 6 is what destroyed the economy last year. So if we start moving again to stage 6 in terms of load shedding, obviously I think it will affect the key segment of the economy, which is the manufacturing as well as the mining sectors. So we cannot afford to continue this kind of trend in terms of load shedding, because their impact on the economy is quite large, especially when it comes to the GDP numbers going forward.
Before we even get to a near-term outlook in this regard, let me ask about what then is to be said about this improvement that's expected and what it means for the South African economy if the near-term outlook is likely to be negative given the impact of load shedding on the broader economy.
I think the key aspect is around the employment in the economy. I mean, if you saw the numbers which came out in terms of the unemployment numbers for the second quarter, there was an easing in terms of unemployment numbers. And also, I think what normally happens is that those numbers in terms of unemployment or employment, they are always aligned in terms of what's happening in the economy with regard to the GDP numbers. So I think that slight improvement with regard to the unemployment numbers is a clear indication that obviously the GDP numbers will also be slightly improved from the previous quarter. But I think realistically what that means that for this economy to grow, it means that we have to look at addressing the structural issues in the economy, because the only way we can create jobs is through investment. And now investment is mostly driven by the environment which is conducive. Now, in an environment where there is a load shedding, lack of supply of logistic infrastructure, and also the cost of doing business become much more higher, it also discourages investment. So in an environment where there is discouragement of investment, you can never have growth in the economy, and you can also not have jobs being created. So those are key elements where you put the linkages in terms of how the economy performs. So it's highly important, we need to create conducive environment for the numbers to improve in terms of the GDP growth patterns.
And of course, this would affect sentiment. An improvement would be a good thing, especially because it would be a second consecutive improvement if that's the case come 11:30, and we hear from Stats SA of an expansion that continues within GDP. But you spoke of investment, and South Africa has just hosted the 15th BRICS Summit, and sentiment was quite positive then. And a week later, we are sitting with ramped up load shedding. The mixed messaging when it comes to the performance of the South African economy, as well as the day-to-day running of the country and those leakages that you just spoke of. What is it? Because it seems like it is a picture that is not congruent.
Well, it is exactly in that line. I mean, when you talk about the BRICS Summit, the key message there was around trade and investment, and obviously the environment which creates trade and investment is all being destroyed by what's happening currently with regard to load shedding. So it actually more or less puts us in a setback with regard to how we move the economy, because sentiments are very key. People or investors want to move in an economy where there's guaranteed products in terms of production. If you're doing trade with other countries, for example, in the mining sector, and then there's a drop in terms of your production patterns, obviously that will also affect the trade volumes into those specific countries where you're targeting for your trade. In the same way, obviously, I think as I mentioned earlier about the investment environment, obviously those countries which are in the BRICS family now, who want to invest in South Africa, will try to say, okay, now, how do we move forward in terms of putting up, let's say, our motor vehicle plant in South Africa in an environment where there's load shedding, where there's no guarantee for power. So I think it raises a little bit of concerns. So the area we address is issues that we're facing in the economy that are impeding patterns towards growth of trade and investment. I think the area the better, because it's really sending us wrong messages.
Thank you so much for your contribution, as always, economist at the Dawn Consulting Group, Chifipa Mhango. They're giving us a preview of what to expect when it comes to the latest GDP numbers that will be released by Stats SA later this morning.